Alrighty, ladies and gentlemen. Good morning. Good morning, NASDAQ, with some live trading coming at you. But similar to last week, might not be as much trading as you'd like. That's okay. Pretty slow out there. Good morning, chat. Good morning, Dom. Good morning, Huddy. Dom was gone last week, but he has blessed us with his presence this week. And we're here to live trade, but not live trade, because there's just not much out there. Which is perfectly okay. I think the hardest thing to do for traders is to understand that doing nothing is something. And we will probably do nothing for you guys this morning. How exciting. Good morning, Dom. Good morning, Huddy. How are we doing?
Morning.
Good morning, Kyle. We're doing great. Thank you.
There you go. Awesome. Okay. All right. Chat. Wayne, Slight Cosine, Caleb, Mark. I'm going to butcher it. Buccaneer? Boutonniere? I don't know.
Buccaneer?
Buccaneer? Yeah. Mash, Drummer, Jerry, Disclose, Chris, no thanks. Hey, no thanks. Good morning. Welcome in. If you have questions, feel free to throw them in there. We're going to go over our watch list as bleak as it is. Maybe there'll be something that pops up that gets our attention and gets us trading. But if not, we will just keep answering questions, watch some tickers, and then get on out of here. Because it's just nothing's really happening. Small caps. When's the last time I took a small cap trade? Because my brain, I'm like, I have swings I'm taking, even though none of them are really working. And then I have day trades, and I've really taken very few of those. And so, like, the day trades aren't making me money because there's none of them. The swings aren't working, and I'm taking lesser trades of those, but still too many of them to where I'm losing. So it's just an all red kind of month. I've had only one red day or one green day this month, and it is smaller than all or any of my red days. 20% win rate. So we're just having a great time in November. Yeah, we're like outnumbered. I mean, I've taken three small cap trades this month, and that's like, those are like pushing it. Like I didn't really have to take those. And I mean, by the middle of a month, I should have like 20, and I've got 3. So, little bit different of a month. But anyways, my watch list, as bleak as it is really just a watch party. Watch list. We say watch list, but usually watch lists involve tickers that are actually actionable and things that you're ready to trade that day of. I just put a bunch of tickers that I'm watching. So GLTO, nothing for me to do with it here. Just the most volatile mover in the last 2 days. Clearly tried to break out over these highs, faked out, but still holding the lows of 15. Doesn't mean I'm bearish, doesn't mean I'm bullish. It's just there, so we're going to keep an eye on it. LFS was a squeezer yesterday. Again, not really bullish, not really bearish. Don't know what to do with it. Just one day runner. I don't really touch one day runners in most cases, especially if they gap down. So even though this is up, 400%, couldn't tell you what's going to happen today. I have no idea. SNDK, I've been wanting this to go parabolic, and some of you might be like, yeah, of course it's parabolic. No, I mean like perfect blow off parabolic. Because if it doesn't do that, it's just going to keep on grinding higher. This thing just doesn't die. Now up from pretty much 40s, 50s to 270. I was hoping these 2 days right here were going to be that blow off, and we'd go one more day at like 300 plus. Unfortunately, we did not do that. We gapped down and then just grinded higher. Looks like we might be doing the same thing today. Eventually, there will be a bigger red day that probably puts in the backside of this thing, or the end of this run. But unless it's some perfect gap up kind of thing, and run every day, then I don't see the predictability here, for at least for me and my style. This one was okay, right? It had 2 big up gap days, and this technically was probably the biggest range. And maybe not the biggest range, but one of the more easier predictable red days. But again, only 2 days. Like if you did the same thing yesterday, after 2 days, you took a loss. So we'll see. Maybe that finally blows off, but so far it's not doing that. Other than that, I mean, we're just keeping an eye on swings like FLNC. Keep an eye on maybe this 22 break. QS is hanging around, but still has not gotten tight enough for me to like it. It's holding the 15s, but still quite the range from pretty much 18 to 15 on any given day, which is a little too much. Open has had a very big bounce since earnings. Would like that to kind of consolidate for a bit. And then AMPX, same thing as like QS, holding up, but the range is chopping up, chopping down. So we're still in this kind of pretty wide to 14 to 11 range. Need something a little more tighter to then maybe try to push the 14s. But that's pretty much it. I mean, that's a whole watch list, and none of them are actionable per se. They're just there. So I don't know if you guys any other tickers to mention or add, but that's it for me.
Buddy,
I got nothing.
you got a gap first.
Yeah, I'm not going to trade it.
What?
It's not the float I like.
What is this?
Not the sector I like.
CMCT.
It's just the stock that's up that I'm not going to trade.
It's got what, a 700K float. I remember I briefly looked at this earlier. Yeah, it's like the float and the shares outstanding are exactly the same. Maybe give or take a few thousand shares. So sub $1 million. What sector are they in? Or real estate? It's a REIT. Interesting. REIT. We've seen REITs die before, but they're different. They're not necessarily a traditional stock. It's a real estate investment trust. But yeah, so no interest from Huddy, no interest from me. Dom was honest enough in the watch list yesterday to say, I have got nothing on watch. That is the watch list. So that's what we got, guys. Let's take a look at chat. Again, we'll watch the open, but yeah, I don't think it's gonna be all that interesting out there. Trying to figure out where to put my. Actually, I can just put my chat down and look at the chat from my phone. It's probably easier. Okay. Joseph, what do I think about PUMP for a swing? I did see this ticker. I don't think it's something about it I remember not liking. Pump. I mean, yeah, it's flagging. It's holding. It's now surfing the 10 for 3 days. It's gas though, petro, and I don't know if I really love that. Not to say you can't love it. There's no rule against them. It just also, I mean, this trend sometimes it's just going to be choppy for a long time. I mean, I don't know. That's the problem with swings. The win rate's so low that like you kind of have to trust as many as you can, but you also can be picky if you want. I mean, you can do whatever the hell you want. I don't know. Something about this one I am not all that jazzed about, to be perfectly honest. It looks good. It could keep working. I just don't know. I mean, what were earnings good? I mean, they lost money, but they made some revenue. Yeah, I mean, I probably should put it on like a watch list. I have a watch list of just like 30 tickers or 40 tickers that like could set up or are running or etc. It could be good. I just have no idea. I don't have much conviction on something like this. Maybe I'm overreading into the gas idea or the energy, whatever this is, petro gas. Because I feel like if it was tech or if it was like something, if it was like energy for batteries like we've been seeing, EOSE, right? Or FLNC. I probably like it more because that's just been a stronger theme as of recently. But I do like the name. Pump's a good name. Makes it pretty clear what the company does. Just kidding. But Pump's gas, not
I have a
Pump's
question, Kyle.
Yes.
You know how Kalamagi always says like he's looking for like the 1 to 2% of stocks, like the strongest stocks in the market.
Mm-hmm.
Is that something you care about, or will you go down your entire scanned list and basically anywhere on the list, or do you really only care about the strongest ones?
Like when I'm scanning.
Yeah, because I feel like there's a lot of them like these ones that you can't really, just like when anyone pulls up a chart for us, we're kind of like, I don't really know why I hate it, but I do.
Sure.
And I feel like there's probably a lot of these, and it's like, would an easy answer be, oh, it's not really that impressive of a mover compared to all these other ones, or?
I mean, if it was a laggard in the sector,
he does say that, right?
Yeah, I mean, if it was a laggard in the sector, then I would that would be another good reason to ignore it. But I haven't really come across other gas plays. Like again, the energy plays have been very present. EOSE being the strongest one, and pretty much the only, not to say the only winner, but my actually main winner since I've stopped out a decent size of Lumen. I might even stop me out the rest today. But yeah, I mean, I definitely don't really care for the laggers. I remember giving SMCI a ton of attempts in, I think it was this area. right? Only to really maybe make a little, lose a little, never really get anywhere while the semiconductors were running. Eventually it went a little bit, but even then it still died, especially after earnings. So that was never great. OKLO was a leader in nuclear, and SMR was following OKLO almost perfectly until, for whatever reason, in July into August, this huge gap down day, I don't know what it did to SMR, but it completely stopped following OKLO. This whole run, SMR was like hand in hand with OKLO from, May to late July, right? You can barely see it now, but from May to late July, they were moving almost hand in hand. OKLO gapped down less and held. SMR died, and so then OKLO went on to have this massive run much, much higher, and SMR just lagged big time. And I remember a lot of people liking it here, and I said, I just don't, I don't care. I don't care how good it looks. It is insanely laggardly. I have no FOMO whatsoever, and that ended up being the right decision because it broke out, and then even now it's lower than where it started in that consolidation. And OKLO is actually still higher. It's actually still above all of this consolidation. So yeah, I do care and only want to care about maybe more of the leaders. I just don't know if pump is one of those or not. It's kind of, to me, it comes off as like a one-off, no sector play. I mean, sure, maybe it's in the energy, but it's a different. It's like gas energy. It's not battery energy. So I don't know. Maybe I'm overreading into it, but it's just okay. And again, given the swings for me have been like 1 for 10 in November, it's like I'd rather just chill, just hang out. We got 40 seconds here. Grail was another one I was watching. It's kind of hanging around. I mean, there's a lot that are like potential APLD. I remember, and that's rolled over. What's Iron doing? Yeah, Cypher's probably the same. Yep. There's a lot of good charts that just no longer are around. Pony was a few weeks ago. I think that died. Oh God, yeah, back. OUST I think did as well. Yeah, there's not much out there, guys. There's not much going along. Got a question. Hi, Dominic. I have a question. All right. Did you take MTC reversal? Was pretty illiquid. I don't remember it being illiquid, but we can look at it. I bought it at the 237, sold at 235 under the fake VWAP crack. Let's see. That's the market open. I wouldn't call this. I mean, unless you think differently, Dom, but I think you're along with me. This isn't a liquid. This is pretty. Maybe the first 45 minutes
here. You have to understand when you're trading a reversal. This is why it's really important to know your patterns inside and out. Like, it's one thing to say on a huge breakout day, a stock's trading 2 million shares on a $1 stock. That is inherently illiquid, but that same principle could be completely flipped if it's on a backside move, because you have to ask yourself, what am I trying to do with the pattern and what do I expect to be happening? I saw a lot of people calling this a liquidity trap. Stock goes from trading 350, 130 million to down to 30 and then 3 million shares. And it's holding up near the highs. Like, you have to, why would I expect, like, not every play should have the same level of criteria because they're all trying to do something different. And I don't think it was actually all that illiquid. It was an increase of like 5x from the previous day. You could tell in the first 5-10 minutes it was up like 1 million or 2 million. So there was an increase in volume. It's just inherently a pattern that is going to start on the more liquid side, because you got to think of someone like a Kyle, let's say, swinging the short from 315 and it's not breaking down, it's not breaking down, it's not breaking down. They're looking at like a 5-day chart, and what's going to cause, like, those covers, those dip buyers, those are the people that are going to start to pop it back into range, and then you're going to see an increase in volume. And you don't really see that increase in volume to happen until it breaks high day at like 10:20, right? And so you have to kind of be okay with that lower levels of volume when you're taking the trade. Still want some sort of minimum. The spread was really tight on this one. It's not like this one got crazy. It was a couple cents at the worst, but you have to know what you are playing. Not, you can't expect a random small cap on day 3 or on day 2 or 3 of red days in a row to trade like Tesla volume. Like, it just doesn't make sense. You have to understand what's at play in the circumstances for this stock, and the pattern. And most times, unless they're getting news in the pre-market, we're going to start a liquid. And then you're going to see covers come in and people are like, F this. I'm done, and then you're going to see that bounce. And sometimes the volume comes in and it squeezes out a lot further than you think, and other times you just get that small little move, like maybe to 260 to 280, and it's done. Um, but I think there was plenty enough volume there to trade it. But those are not like the type of plays if you're trying to trade 20, $30,000 a trade risk. Um, this is not going to have that level of volume for that type of play on most small caps.
Yeah.
Something like a BYND you would, but
Where is BYND? 120s, yeah. Bounceless. Just going nowhere. CMCT as a gap crap. We already answered that one. It could crap. I mean, it could be a gamma crap, but we're not too interested. We'll see and find out. So far, doing same as it did pre-market. SoFi is a swing I bought yesterday. That's up a little. That's nice. See how that one goes. Although, and TTI is a swing I bought yesterday as well, and that's looking, that almost stopped me out. Got like 3 pennies away. I still could. So, don't really love buying this up, 4 or 5 days in a row, but luckily it's a very small loss if I stop out. So that's cool. Kevin asks SNDK, what do you think is moving this kicker? I think SNDK is in the data storage space, if I'm not mistaken. Almost positive. SanDisk. Let me double check that. SNDK. Engage in development, manufacture, storage. Yeah. NAND, flash. Removable cards. Yeah. Storage. Let's see. Data. Storage. Stocks. I'm pretty sure there's another one that's gone pretty high. Let's see if it gives me some other examples. PSTG. Yeah, it's okay. Done a little bit. Not as good. Or WDC. Yeah, look at that. Obviously, it bounced from April like the rest of the market, but then clearly at some point this really ramped up. So yeah, that's the sector. That's what's going strong right now. Is or one of the smaller sectors that is doing well, but wasn't as clear of a sector that I saw until it was too late. Like SNDK, I don't think I saw it until like here. And if I can go back in time, I actually would have tried to buy this. This is okay. It's not bad. 130s. Would I have known it gone to 270? No. God no. I'm speaking hindsight, but it would have been a little sketchy. That's my biggest problem is like buying ones that are already run huge, because it's already went from 50 to 130. So it's like, buying up here, man. Like it could keep going like it did, obviously, but if it doesn't, you're putting yourself in for a loss, which is pretty common for swing trades. So it's not like I'm doing anything that I wouldn't normally be doing with other swing trades, but I have like a mental block there where it's like, well, it's already up 100 and something percent. Like, I'm really buying this thinking it's going to go up again. Well, in this case, it did. Some do just keep on going and they don't stop. So something to consider. Let's see. Which, last thing to your point, Kevin, I'm sure the data storage hype is correlated to AI. Like, if AI needs storage, well, as much as AI needs energy, which has been a hot sector, if that only amplifies how much energy one needs, it probably needs a lot more storage as well. So I would imagine that's probably correlated. If I could just spitball and guess without even doing the research. Jonathan says, yes, CRWV. I think that crashed on earnings. Get rid of this because I heard they something like they don't even have enough manpower to like perform the revenue that companies ordered from them. Not revenue, like the services that they provided. They're like, yeah, we can't fulfill this till like years later. So it's like super delayed. So that's kind of selling off. So no, I would not look for a bounce there. Yeah, hopefully open more consolidation. Dave is a huge base. I remember looking at that. Yeah, I remember drawing this earlier. Worked for a few days and then came back in. Yeah, it's looking all right. Probably should keep an eye on this though, because maybe eventually it does have a move. But for now, it's just kind of just basing. Alrighty. Trying to make sure I'm not. Is there anything markets are pulling a little bit? Are those red? No. They're about even. What do we think about open? We already kind of talked about that. Legend says we didn't answer the question. What was his question, Dominic? I'm pretty sure he absolutely answered your question about MTC.
What's the question? Did I take it? Did I miss that part? Yes.
Yeah.
Is that a chime?
No. Yes, it is.
I can tell. I'm not looking at the com.
Let's see. Sly says, does ENGN classify as an extended gap and crap, or is it just extended? Wait, overtrading brain talking. ENGN. That would be your overtrading brain talking. This is not. This isn't either. Sure. This isn't extended or a gap and crap. This is just a stock that's gapped up, decent amount. And again, it all depends on the definition of someone's gap and crap. But again, just for I don't know if confluence is the right, but so we're on the same page. We only consider gap and craps up like 70% at the minimum, right? Really, the higher the better. But so this gapped up from 6 to 8? So not even 50%, like 40 something percent. And then it's gapping up now again, 10% ish, not even. So there's nothing, as picky as that sounds, like I would say there's no volatility here. And some are like, what? From 6 to 11? I mean, yeah, like it's not that great. If something's really good, it's gonna pull something like an FLC, right? Was that yesterday? Or what was it? FCL? What was the ticker? What was the one that went from 1 to 9? LFS, sorry. Right? Neither I'm going to trade because they don't have a setup, but it's like we want something crazy. Like when you say overextended, I'm thinking hundreds of percent extended. So ENGN here, barely up 50% over 2 days. It's just not, there's not enough conviction for me as a short seller to feel like this has to sell off. This could go higher for all we know, so something to consider. That's a good question. Kevin says, how many legs or breakouts can happen before you start to feel like you're hesitant to buy the next breakout? I mean, I don't really have again, that's a problem I haven't come across as often enough to maybe really think about it. I'm sure that you're referring to like something like SNDK. I mean, and as it goes higher. Here it was up, like we said, from 50 to 1. This was approaching 200%, which is a lot, but it's not the most we've ever seen, right? My first broad answer that I would think I'd give you would be like, if something's up like 300, 400, 500%, like if SNTK set up again, or even here, like someone might try to argue like it's still surfing the 10, like buy it right after earnings for a new move over these 200s. That I would not do. Maybe that's dumb. Maybe this can go another 100% from here. But after a triple or a quadruple or a 5x, like I kind of have to be like, okay, I've missed the move. I just have. Like it's not, maybe in some really, really rare scenarios, like it'll just keep going and yeah, I'll have FOMO, but it's hard for me to join that party. Whereas, yeah, I've seen plenty. And the reason why I say this is because I haven't, from my experience yet, I haven't seen a sticker that's gone 5x do another 5x. or 100% from that level to where it's like, okay, it's worth me still giving it a shot. Whereas I have seen tickers that go up 100, 200% and then still go up another 300%, right? My most recent one I bought was, there's two that ended up being really big winners. Open, right? I didn't buy Open until fours, right? After already being up 100% from 2, ended up going to 10, right? That was really nice. Iron, right? I tried to trade Iron a little bit in here, didn't do too much. After it was already up from, the 8s to the 20s, missed buying it, rebuying in the 20s, then goes to 30. So now we're up 100, 200% on the run so far. And then I buy it at 26s, and then we just keep going. We do another 3x to 75, right? So it's like I will buy it up that much for previous examples, but, it's hard and this is why I was pretty hesitant on Iron up here. One, because our earnings was coming out. But 2, it's like it's had such a big move. Like for it to have another leg higher, it's going to need a lot more time. And so it doesn't shock me that it faked out here. And I would imagine earnings actually kind of saved me because I definitely had FOMO. But what kept me from buying it was the main thing that kept me from buying it was earnings, right? If there was no earnings, I probably would have said like it's extended. I don't like it being extended, but I'm going to give it a shot, and it would have been a loser. So I'm happy to have avoided that one for now. So hopefully that gives you some clarity. But I don't have the perfect answer. There probably are examples of tickers that have gone up 500% and then still go up another 500%. They're just probably more rare. Missed why CMCT was not a good gap and crap. It could be a good gap and crap. Me and Huddy just don't like it because the float is sub $1 million. It's 700K. And that's not to say I haven't shorted floats under $1 million. I've shorted many floats under $1 million. But over time, I've gotten more pickier. I've gotten more maybe risk averse, and some of the biggest and scariest squeezers are floats under $1 million. So that's why. It could be a great gap and crap, right? Hindsight's 2020. This could be at 6, and everyone could look at, yep, it was great, should have taken it. But I have to, roll with the data or the factors that I have in front of me in real time, and I don't mind not trading a sub-$1 million share float.
I just find like if you like really look at all the sub 1 million floats and the slippage attributed to them and the cost of locating sometimes that completely take you out of even trading them, like it's not the strategy works well if you take as many as you can, right? And so like there are clear situations where you can't borrow shares of a stock to short a low float if they're like 10, 20, 30% of the stock's price. And then B, when you lose and there's slippage like on SPRB and you lose like 40% over your stop loss, like you just like you add them all together and all these like low floats even worth it. Like the few that I win, I feel like you get back in some way or another. Either through a missed opportunity cost or through just general slippage that it's kind of out of control. So yeah, it's not that they don't work. It's just that there's things that create edge erosion within the setup that make them less ideal and like work smart, not hard. Like if they're barely adding to the bottom line, like I'd rather not take those over the long run.
There you have it. Are we still watching H-Graph? Been surfing MAs and consolidating the last few weeks. Let's see. I'm sure it's still holding up.
I don't know if I can do it.
Yeah, it's gotten kind of weird on us here. Me and my lines here. This run was
where you answered that question about how many breakouts do you buy before it's gone too far. We've slowly worked our way back from like the 1s to the 3s, and I don't know how many dollars I've made. It's not many on each one of them.
Yeah.
I don't know. I think a blow off is probably going to happen at some point, but these are not the best market conditions for a Canadian OTC.
Yeah, volume's only gotten. This run was great because it was still choppy at moments, but had the general trend pretty clear on fairly big volume. Ever since that move, it's never gotten back to even half of what the highest volume days of this run was. So it's if you were swinging it and you're using like the 20, you'd still be in. Even the 10, you'd be in at most times. But it's just getting real choppy on you. Breaking new highs, you think it'd be pretty smoother than ever, and it's actually consolidated the most right of these highs than any other period, right? I think we've just now eclipsed maybe this previous period of like 2 or 3 weeks. We're like on week 3, week 4 here. No, I mean, again, I don't care. It's gotten too liquid. I would have liked it if volume increased, but if I was long, I'd be like, this isn't, I'd probably still respect a moving average, but I wouldn't be all that thrilled or jazzed about it. It'd be like, it is what it is. So. Let's see. Under what conditions will we consider SNDK a short? I would watch the beginning of the stream. I talk exactly about that, what I'd be looking for, and it's just not doing it, unfortunately. Kevin says it's difficult to find the sweet spot of this stock is a strong leader, so I should buy more of it versus it's overextended, I guess. I mean, leaders don't have to be necessarily extended. Again, OKLO was a perfect example where it had consolidated quite well, in the 70s here, while SMR really faded, right? If SMR was going to stay a leader with OKLO, SMR should have consolidated 40 plus. Should have been all up in here, right? The same way OKLO was all up in there, right? Right? Or even use the moving averages, right? Really just respected the 50 the entire time. I'm pretty sure SMR went below it. Yeah, well below it. And actually started using it as resistance for a bit. So it's not that the leaders have to be extended per se. I mean, sometimes they are, so I know what you mean, Kevin. But, for me, when it came to like OKLO versus SMR, it was pretty clear that it doesn't mean it's going to run more, right? If we're just trying not to use hindsight, but I could easily tell if there was going to be one I was going to buy over another. This one was clearly holding better up than SMR was. So, ooh, the NASDAQ just kind of pooping itself. You can barely tell, but here, let's pull up an intraday. Straight down. Start the day. But all right.
You forgot to check on it with all the plays.
Yeah. I don't know. Yeah, I didn't even really look at it when there's nothing really I'm buying. Things are still okay, but all right, a couple more questions that we'll get on out of here. And actually, that was the last comment. So, oh wait, someone says SMGM question mark. Our favorite kind of question. Illiquid. That's about as much as I could say. Extremely liquid. It's always sketches me out going from 100 million to practically zero. Not the one you want to trade, in my opinion. Unless it can get more volume, but again, that's always hard to predict. It's like overnight, just poof, gone. Sketch. No.
It's so weird.
It almost to me.
Someone smart.
To me, it almost confirms like there was just an algo on this, right? Like, how could there, if there was like true retail interest or enough trading interest, like there would be enough people in the following days to keep being a part of it, even if it was decreasing in volume. But to go from this big to zero tells me like literally there was just an algo maybe two algos, I don't know, like literally just like playing with themselves, like back and forth, right? Being literally the majority of this volume. And then after the day, they're like, we're done. And now nothing, That's my only guess or explanation of why that would happen, because it just doesn't make any sense to me how you can go from 100 to practically like 100 to 1 million in a day. It just, any natural runner, it just doesn't happen. Very, very weird. Kyle D short VCIG yesterday, knowing their PR is BS from the other day. VCIG. I didn't even know they were up, to be honest. But no, I still wouldn't have shorted them just because I was very bearish here, even though I still didn't short it because it died too quickly. But doesn't mean I go away from my rules of like, hey, this still needs to be like semi-extended. And so going from, 1 to 2 is okay, but one green day is just, it's whatever. I wouldn't have, let's say even if I did get short, I wouldn't have expected it to drop from 190 back down to 125. So no, it would end up being a good short, but it's not one I'm taking part in. So no. Because it's also one of those ones where, sure, it worked, but if it doesn't work, I have reasons why I took the loss then, right? And that's kind of the case with most things. Like, that's why I stick to my process or strategies is like, okay, I could short, and if I'm right, okay, whoop-de-doo, I made some money. But if I short it and I'm wrong, I know the immediate reason why I'm wrong. It's like, Kyle, you're shorting a one-day runner. It hasn't even gone 2 days. It's barely up 100%. It's like I have all these criteria that I know I'm not sticking with. And so the moment I take a trade and that becomes a loser, it's like the reason why I took a loser is staring me right in the face, right? Which always really pisses me off because it's like it makes me feel like I know better, which I should know better. So therefore, I just don't take those trades because it worked here. But gosh, if you took every 1 day short, there'd be a lot more losers. Maybe some more winners, but a lot of losers for sure. Any 2 day runner would technically be a loser because if you're shorting on day 2 and it ends up running on day 2, well, that's a loser because you just wanted to short day 2. So something to think about. James says, just want to say, always watch your monthly recaps. Thanks for doing them. Of course. Happy to do them. Helps me and it helps the viewers. So. All right, last couple questions here. Kevin says, for something like iron, I thought even if it was up more than 300%, it probably has more chance of going further than something else that's only up 100% because of relative strength. I mean, relative strength, I view relative strength on a much more smaller time frame than seeing iron up 300% and another one up 100%. Relative strength for me is not necessarily on a sector, although you probably could use it. I use that versus the market. So like if the NASDAQ is down today, whatever's green today has relative strength. Like SoFi, considering the NASDAQ has just gone straight down, and then you look at SoFi, very happy I bought this yesterday. This looks great, right? Just complete opposite direction, heading towards highs. Like this is now, it's not a sector thing. It's like this is an overall market thing. I'm like, I really like SoFi now after today. If this can hold up while the market stays weak, great sign. But like something like across sectors, you look at something like, again, iron. That didn't stop me. Iron was, again, I bought iron in the 26s and started working. That didn't stop me from buying Hive in the fours, even though it wasn't up nearly as much. Right? Because it was too strong of a sector to ignore, right? It's like my brain didn't go to, iron's up bigger than Hive, I shouldn't buy Hive. It's like, no, Hive is part of the strongest theme right now, which is data center plays, and it's still showing me all the technicals of a good swing trade. I need to be taking this, right? So there's no part of me that would hinder from taking Hive because iron's doing so good, right? Because the reality is Hive is showing great signs of strength and a great technical look of working. Whereas SMR, again, if we're using Hive versus iron and OKLO versus SMR, again, SMR, right, below the MAs, it went from pretty predictable trend to just insanely choppy, right? Holding none of the SMAs, briefly here and there, but like always going under them, rejecting the 50 a few times, rejecting the 10 and 20 a few times. Like I don't know, again, I don't know what happened here, but it entirely changed characteristics, right? Where Hive, to me, was actually incredibly predictable, right? Irrelevant was what iron was doing, held the 20 the entire time. There's someone who could have bought this breakout over 250 and been in the entire time and then sold, well up here in the fives because it was just holding the 20 the entire time, right? So I don't think too much about it of in that sense. It's like, does it technically look good? Is it in a strong sector? Great, because it's not so much about the leader and the laggards. It's like which ones are strong enough to just keep going. And where there's laggards, like here, I'll give you a laggard, BTDR, data center play. Well, the whole time while iron and Hive were running, right? If we get the time frames right, what Hive was doing this in, right, late September to October. Same thing with iron. BTDR, right? Late September to October, it had one gap up day. I mean, that's pretty much all it did. It chopped from 18 to 20s, low 20s for 2 or 3 weeks, gapped up probably on news, and then that's all she wrote. And then now it's right back down. Like, this was a major lagger and or a very choppy ticker. Like, even if I did buy this, let's say I bought this over here at like 14, yeah, it would have worked, but look how many days you spend just break even. I mean, you hold this for 2 weeks, you're at the same price of 16. Now, granted, if you're using 20, great. You have 20 days for this thing to catch up, so that's why it worked. But it's not just enough to have a trend where moving averages hold. It's like, is it actually getting somewhere fast? That's why I didn't like Wolf as the eventually I gave up on Wolf, because I was long it for this entire time in the 10s and 11s, and I kept seeing my P&L go nowhere because it was literally at the same price for like 3 weeks straight, and then finally it goes, which I was kind of annoyed about. But that, I don't like this kind of a trend. I want something that's really going to get somewhere fast. Iron Hive, great examples. This one, to go $1 a share because it's just so damn choppy for so long in the same range, is not the kind of, trend I want to be long. If I happen to be long, it's better than nothing. It worked, right? But it's not going to be the most optimal, if that makes sense. All right, last question. Do you or have you ever traded breakdown shorts, Warren? I would highly suggest watching some of my recap videos because they're not common. But yes, I absolutely do. They're not frequent, but BYND is absolutely one of them. I shorted this breakdown right here on this day. Started making new lower lows, drops from 3 to 2. It was a perfect breakdown setup in my opinion. So hopefully that helps as one of them. I think Buru had one, right? Buru recently, a little more choppier. No, it's okay. Could have done a lot better, but it's also liquid. This one's not bad actually. It just gapped down, right? Breaking these these lower lows. If this was trading into the way, breaking these lower lows, and then actually fading from, what was the price here? From 50s to 40s, that would have been a good one. But unfortunately, it gapped down instead of traded down. So, but alrighty. Anyways, that is our time. Honey Domini, final words before we close it out?
No final words. I didn't even open up a broker. I am gonna go do something else with my day, do some chores, I guess.
Nice.
But yeah, I would be really focused on studying this time, focusing in on, the BYND trades, the Burus, like the stuff over the past few months where we've had really good opportunities back to back. Last month with ADAP and ATCH and DVLT. I would just be focusing my time and energy on doing whatever I can to not trade, but focus on what has worked over the past few months because it is inevitable that some plays will start to come back at some point. And do I want to be just bored and rusty and in a drawdown when that happens, or do I want to be prepared to take advantage of that week, 2 weeks, 3 weeks, 2 months time when we do get some better opportunities and close the year out strong? So I always encourage people in slow times to not just get angry, not just get frustrated, not just sit there and overtrade any random setup you see. And we talked about it in the webinar yesterday. Don't start grading setups against what's out there. Grade them against your criteria. Are they good setups, or is it just the best setup you see today and it's still a C minus setup? And if that's the case, go get better. Go track your setups, back test. Do anything you can to improve your edge while other people are either losing money or forcing opportunities, getting frustrated because it's just not worth it. Times like this, we've been through enough of these where the only thing you really regret out of periods like this is that you didn't study hard enough or that you didn't take less trades. Because it's just not fun when the market sucks to go take unnecessary losses.
There we go. Okay, Wine Wednesday tonight. If you didn't get your questions answered or want maybe more in-depth questions, Wine Wednesday. Bring your favorite glass of whatever beverage you prefer, and we'll be right back here at 7 p.m. Eastern time. All right, everybody. Have a great, lovely Wednesday day, and we'll catch you guys later. Peace.
Bye.